A technical analysis evaluates investments to identify if there are price trends and patterns in charts. This involves reviewing price changes and trading activities. If there are obvious patterns in the charts, there is a high possibility that the pattern will repeat itself, allowing us to second guess what it's going to do next. This allows us to make a decision whether to invest or not. A technical analysis can reveal if a company has a strong price trend, but does not take any financial fundamentals into account. Therefore, you shouldn't rely on technical analysis alone. Once a company has passed your fundamental checks, you can go ahead and run through a technical analysis on the company, so you can be confident that you will be able to make a return on your investments. There are typically 3 chart patterns you should look out for. 1. When the price is going up. How long has it been going up for? Is it consistent? Does it go up, down, but every time it goes up, it goes back up higher than it was before? If this is the case, we call these higher highs. I'll explain more about higher highs later on. 2. Sideways. Does the price go sideways, go up and down in a sideways motion, not actually creating a momentum? Or 3. The price goes down. You can make money in all 3 of these patterns, but in this training course, I'm going to cover how to invest in companies in an upwards trend. Regardless of a trend direction, up, sideways, or down, a good chart pattern will have support and resistance lines. In general, each time the price meets one of these lines, the price will revert in the opposite direction. Support and resistance lines can identify when it's the right time to buy a stock. If the price is on the support line, it can go up, and this is where we would want to capitalize. Here are some examples of different chart trends: up, sideways, and down. In upward trend, you can see the price starts from $50 and goes up to 100. So from 50 to 90, down to 75, up to 125, but back down to 100. Now, you can probably guess that the next trend or the next price will actually be up somewhere around here, which is about $150. In a sideways trend, you can see the price starts at 50, goes up to 100, back down to 50, up to 100, back down to 50. So if we were to invest here at $50, at the end of this duration, to say this is 6 months, you still will be at $50. If you were to compare this to the upward trend and you were to invest in a share price at $50, and in 6 months time you were to come out, you were to come out at $100 here. Now the downwards trend. It starts here at $100 and it goes up slightly, 125, back down to 75, up to 90, and down again to 50. What we want to do is actually identify charts that have a upwards trend, that are consistently going up, and identify when is it the right time to buy. So I have a question. Out of these 2 lines from each of these charts, so the bottom one here, top one here, the bottom one here, the top one here, the bottom one here, the top one here, which line would you want to invest in first? Would you want to invest here at $50? Or would you want to start your investment here in upward trend at $90? Or would you want to start here at $50 at the bottom line? Or would you want to start your investment here at $100 at the top line? With the downward trend, it wouldn't be ideal to invest in this stock at all because the price is consistently going down. However, in general, the bottom lines on these charts are called the support lines and will have the lowest price in this trend. Therefore, it's ideal to buy when the price hits the support line. To make it easier, I've color coded the support and resistance line for you here. The support line is red, resistance line here is green. Throughout this video, I will refer to the support line in red and a resistance line in green. If you're having difficulties understanding what support and resistance lines are, you can look at it like having multiple floors in a house. The support line acts as the floor and a resistance line acts as the ceiling. So on the first floor here, you can see that the price starts at the support line. It hits the ceiling of the first floor, goes back to the floor, hits the ceiling, goes back to the floor, hits the ceiling and then breaks through the ceiling and goes onto the second floor. Then hits the ceiling of the second floor, hits the floor of the second floor, back to the ceiling, back to the floor, back to the ceiling, back to the floor, then breaks through the ceiling and enters into the third floor. Now it hits the ceiling of the third floor, the floor, ceiling, but breaks through the floor again and enters back into the second floor. And then it makes a massive leap through the third floor, the support line, and actually straight through the third floor ceiling resistance line and goes straight out of the roof. In this case, it will be onto the fourth floor. Now that we have identified what support and resistance lines are, what does it mean when the prices touches each of these lines? In this diagram here, we can see the price starts at the support line, goes up to resistance, back to support, up to resistance, and it stops at support. Now, anytime it touches the support line, we can see from previous history that the price has always gone back up to resistance. So therefore, it's a good time to buy when the price hits a support line. Looking at the previous trend, we can anticipate that the price will actually increase and go back up to the resistance line here. So you could say that when the price hits the resistance line, it's an indicator that we should wait, because the price could actually reduce and fall back and go back onto the support line here. So when it hits a support line, it's a buying opportunity. When it hits the resistance line, it's a waiting opportunity. The price can break through the resistance line and go back up into another floor, what we've identified in the previous slide, but it can fall, repeat in previous history, and fall back on the support. Now, even if we were to buy here on the support line and it goes up, down, over a matter of time, the price will increase and move upwards on the support line here. Now, if we were to buy here on the support line, again, it could go back up to the resistance line and break through and follow another trend. Anytime a price actually comes out of this trend, so it comes out of the trend between the support line and the resistance line, a new trend has formed, and we need to wait and see what the new trend will look like. Just because the trend is actually going upwards, it doesn't mean that it can have a reversal. It can hit the resistance line, hit the support line, and break through the support line and actually trend downwards. Let's see what a support and resistance lines look like on an actual chart. Here you can see the support and resistance line drawn out on the chart. You can see it follows a similar trend. The price hits a support, goes up to resistance, back to support, hits resistance but breaks through slightly, comes back, doesn't really touch the support line, but goes back to resistance and again support. And we can anticipate that the price will go up and hit the resistance line again. So what does it mean for us to place a trade? The green dots represent opportunities for us to make a trade or to buy some shares in this company. Now we know what support and resistance lines are. Let's plot this out on a charting tool using TradingView.